Welcome, I'm Jim. Today I want to share with you one of the greatest ways to make passive income, and that's selling options. For the longest time, I've been making fairly close to 200 a day. Now I'm actually closer to 350. I want to talk about how I've been able to get there. I'm also going to share with you some recent trades that I did on some really good securities, both an ETF and a stock. So stay tuned. I think you're really going to enjoy what I have for you. I typically like to give a quick market update. I don't really have much to add this week. Not much has changed. I still think the Fed's going to hold steady and maybe even start lowering rates second quarter. I also believe that we're probably going to slow down with a lot of the volatility we've had recently. A lot of it has come from earnings. Any company that barely missed earnings has just been clobbered. So I do think that's going to come down quite a bit. We're getting fairly close to the end of the earnings season. We do have some coming up next week and maybe even a few on the Thanksgiving week, but I think it's going to be more like a trickle out after that. And I wouldn't be surprised if we see a Christmas rally, that we actually see the market go up after Thanksgiving and into December, probably going all the way through the end of the year. At least that's my opinion. I just have that sneaky suspicion. Of course, I could be wrong, and as always, it's my 2 cents, which it may only be worth 2 cents. So let's jump into the main stuff for this video. Now, I mentioned in the beginning that I've got a few securities that I do want to share. I'm going to do that towards the end when I go into the demo part. But I wanted to talk about, and I like to share this literally every week because it's so critical. You know, it's kind of like buying the house. You make your money, or you make your mistake on the front end when you first make the purchase. And that is so true with selling options. You really have to pick the right companies and ETFs. I have mentioned in my previous video, if you want, I'll include a link up above if you want to go back to that. But there's some key criteria that I look at typically. I try to find a company that has a PE that's not way out of whack, that it's pretty normal compared to the industry that it's in. So you'll find most of the companies that I do invest in have low PEs. I also like to find companies that are fairly near 52-week lows. Not always right at the 52-week low, but if they're fairly close to it, I feel fairly good about them. I also like companies that pay dividends, and if not just pay dividends, but are also growing dividends and have plenty of cash for paying those dividends. And then finally, I like companies that have low debt and are paying down debt. I don't really want to take or invest in companies that have a lot of debt at this time. With the interest rates so much higher than they used to be, it really is a kind of a drain on a lot of the companies that have a lot of debt. Now, the biggest companies, I don't think they're impacted as much because they're so large that they can finance their own debt. But a lot of the smaller companies, a lot of the mid-cap and Russell 2000 type companies have been hit pretty hard. And that's, I believe, why IWM, or the Russell 2000 ETF, has been down a lot recently. I believe quite a few of the companies in the Russell 2000 are struggling with these much higher interest rates on the debt. So once you've identified a really good company, then I also like to look at how many strikes and expirations they have, how much open interest do they have, and how much volume. And the more the better. I typically stay away from companies that, you may look at a specific expiration and they may only have 4 or 5 at any strike in volume. And to me, that's too risky. It may be a lot harder to roll your current positions. So I typically try to get something along the lines of more than 30 or 40 on each volume, and plenty of open interest. So to be sure that whatever I'm trading option-wise has enough volume and enough open interest that it's worth my while, and that it's fairly easy to sell puts and calls. Next, I also like to reiterate, and I haven't said this in a while, but I've gotten a lot of questions from my members recently and my subscribers that, they don't realize that on a down day, it's typically a much better market for selling puts, and an up day is much better for selling calls. It's kind of basic logic, but at first it just doesn't make sense to a lot of people. Now that can be thrown out the window to a certain degree if you're rolling. I've found instances where you can roll something, let's just say it's a vertical put credit spread, but the market's slightly up. The fact that the market's slightly up, the puts that you're rolling may be a lot cheaper to actually close. So when you're rolling that doesn't always hold true. So I encourage people, if you have something that's fairly close to the money or in the money, try to roll it. See if you can actually pick up some income. I typically like to roll if I can pick up another $100 on like a $10 spread, and usually try to lower the strike prices. And that's not always possible, but if you can do it, I encourage people to typically try. The other thing I found, and I mentioned this in a couple videos ago, that I found that I'm fairly safe, even with my positions that are in the money, if they're less than 10% in the money. So 10%, if it's a $100 stock, if it's $90 or below, then I really need to worry about it. A lot of times, if it's less than 10%, I typically have not been assigned. I've also done some research, and it looks like with the OCC, which is the options community or clearing community, I don't remember what the acronym is. If you know what it is, please mention it below. But they do use a random way of allocating option contracts, and they'll do it randomly and with FIFO, first in, first out, kind of like the accounting principle. So just the nature of rolling a position may reduce your risk of actually being assigned early. And that's typically what you're worried about, is early assignment. But again, if you pick the right stocks, you pick them at the right price, then assignment, even early assignment, isn't a big deal because you really want to own those stocks. And sometimes you can shoot yourself in the foot rolling too much. This time last year, I believe Apple and Google were way down. I believe Google was below 100 and Apple might have been in the 120, 130 range. And I kept rolling, and I missed some great opportunities to own both of those companies at really good prices. So just remember, why you chose those stocks initially. And, maybe you don't want to roll. Maybe the best thing is to go ahead and let them be assigned, because then you could start selling covered calls, and you may be picking up those companies or ETFs at great prices, meaning you're going to get great appreciation over the years. So, and then finally, try to minimize fear. I do, with a lot of the people who are getting started, if you've never sold options before, I have noticed a lot of fear. A lot of people really, they don't take the time or be patient enough. They will shut down for a loss a particular position, or they'll roll because they panic. I've had many instances where something has been deep in the money and has come back out of the money, and that's happened literally in the last couple of weeks. I actually have one position, which is a covered call, that's been in the money for 2 years, and I've just been, rolling it again and again and just bringing in more premium. If you're curious what stock that is, it's actually Con Edison ED. I think it's right around 85, and it's been in the money literally since 2021. So those are the main points I wanted to mention. I didn't want to go into too much detail, but keep those things in mind when you're working with your different securities and your options contracts. Next, I want to jump into two securities that I want to share with you today. One is an ETF and one is a stock. But before we jump into that, as always, please hit that like button, subscribe. If you're curious about my memberships, details will be below. We've gotten a lot of really good communication in both levels of my memberships, lots of discussions, ideas, it's been growing nicely, and more people are involved. I am going to probably limit both levels. So I encourage you to take a look. It may be worth your while. So let's go ahead and jump into the next part of the video, and I'll share with you the two specific securities. So hold on, let's jump into the next section. Okay, now the two securities that I wanted to share with you. The first one is IJH. This is the iShares Core S&P Mid Cap ETF. And I've owned this for a long time, and I'd like to continue to trade on it. I've been selling covered calls on it probably for the last year or two, but it's just an overall good ETF. It's not the biggest companies, not the smallest companies. I can't remember. I think it's between 2 and 14 billion or something. So you don't get the the really small companies that may be overwhelmed with debt. It pays an okay yield, almost a little more than 1.5%. And like I said, I've owned it for a long time. It's got some nice holdings in it. And it typically, you can pick up some really good options premium here if we come over and we look at IJH. And you can see right around 231 is the 52-week low. It's got fairly good reviews. And again, it's fairly close to its 52-week low. So if we actually look at the option chain, and I'm going to do this a little different. This is the actual Fidelity option chain. And I like how Fidelity does this, but you can see it doesn't have the huge volume and open interest. So I know I had mentioned in the beginning of this video that I typically like to find more, but this is kind of the bare minimum. And since I've owned this since probably 2018, I believe, 2019, something, or maybe even earlier than that. It may go back to 2010, 2012, something like that. Even though these have small numbers, I've typically always been able to trade it. But you can see here at 235, which is pretty close to its 52-week low, you can pick up some pretty good premium, 250 to 265. So this right here. Now, if you look over at the same calls, and you probably wouldn't want to do the 235, but you could do the 240. And here again, you've got really good option premium for the calls between 690 and 710. So if you just did the wheel with this, you could pick up, again, between 250, 265, and then sell a call and, make fairly good money just doing the wheel. I like to own it, so I typically will keep the shares, and then at that point, I just continually sell calls on it. But it's worked out well for me. It's been a good ETF that I like, and it has, again, better quality companies than like IWM or the Russell 2000. And it's not so expensive like the SPY. So it's a good alternative somewhere in the middle of IWM and SPY. So that's the first one I wanted to share. I did do a trade. I'm not going to go into detail on my spreadsheet, but I did a trade on it yesterday. I did a 235, just like we were looking at, and I brought in $243 on a cash secured put with an expiration of 12/15. So this is from my planning worksheet. This is what I share with my memberships. Like I said, I'm not going to go into detail with it at this point, but let's jump in and talk about the next security I wanted to talk about. So the next security is MetLife. Now, I've been trading with MetLife. I currently don't own any shares, but I think I've written maybe 3 different trades. And I really like MetLife. They have that criteria I like. They do pay a nice dividend, almost 3.5%. Good company, good ratings, year over year. Like if we go to earnings, we can see year over year, they, 34%, 42%. 20, almost 20, a little over 20%. So they have a lot of growth coming up in the rest of this year and next year. And then if we come over and we look, let's look at MetLife. We'll switch. And here you can see it's not quite near its 52-week low, but not too far away from it. I mean, with selling puts, you can get probably within, $4 or $5 of its 52-week low. And then if we come down, what I typically like to look at here is the dividend. So you see 3.5%. And if I look at the dividends, you can see they've been increasing them at a steady pace for a long time. They have a good amount of cash to cover the dividends. Not a huge amount, but for them, a pretty steady amount. And if you owned them back in 2013, you would have picked up $1, just over $1 in dividends. Now, if you own them, you're closer to a little bit over $2. I believe this year it'll be about 208, I believe, or something along those lines. So I really like that aspect, the fact that they're growing dividends, they pay good dividends. They recently met or just slightly beat earnings. They did miss earnings at the beginning of the year, but they recently have done well. And then if we come down to debt, which again is one of the key things, they've decreased debt. It's not way out of control. You can see their equity is pretty high, and they've actually reduced equity. They've been doing buybacks. So that's another very important critical point, is to be sure they don't have a lot of debt. And then if we come over to the option chain, make sure I'm going to the right one. Here we go. So you can see in a January 19, which is 71 days away, and they're up today, so the numbers are slightly down. You can see what I was talking about before. So MetLife is up today, and the put amounts are down, whereas if you come over here to the calls, you can see the calls are actually up. So for doing the wheel, I've been doing closer to a 30 delta. So at this 5750, you can bring in between 150, 160, and then if you look over here with calls around the 60 call, you're bringing in 255 or 265. I feel like MetLife actually is better for the call, both volume and then also the amount. Actually, not volume. Well, no, volume is pretty good. The volume's down a little bit, but they have huge amount of open interest on both sides. You can see open interest of almost 16,000, 12,000, 3,000, 5,000, 7,000. Similar over here, a little bit less the deeper you go in the money, but another great opportunity for using the wheel. And again, if we jump over to my trades and we look at the MetLife trade I did earlier this week, did that on November 6th, and both of these trades were in my new Fidelity account. I did a 5750, a 3143 delta, expiring on 1/19/25, which is I think 71 days out. It was 59.86 at the time, and I literally brought in $345. So if that gets assigned to me, I can turn around and bring in pretty close to that same amount with calls. And then these are the trades I've done this week. So I've done so far, 6 trades, and I brought in 1,687, which is an average of 421. Now, at the beginning of this video, I said 350 is what I've done on an average day this week, but that was based on yesterday. I did another trade today, and that's why it's a bit higher than what I originally mentioned. And here you can see for the total of November so far, 2467, and up here you can see my weekly goals, 1,600 a week and 6,400 monthly, and I increased that since I recently moved my 401k money over to a new IRA at Fidelity, where a lot of the new wheel trades that I'm doing are in this new Fidelity account. And again, this is all available to my members. They get this spreadsheet at the beginning of each week. I should probably provide it at the end of the week, but I do sometimes. Other times I forget because I share each trade as I make it. So literally as I make the trade, I post it out to my memberships, and so people have it right away. I put it both in my Discord and my Patreon. So that's what I wanted to share with you guys today, that again, picking the right companies and ETFs is really critical, and you can do really well, and you don't necessarily have to take a huge risk by always sticking with, companies like Tesla, and Apple and Google, and, you still can find really good companies that are not way overpriced, that are closer to their 52-week low. So as always, if you have any comments, concerns, or disagreements with me, please leave a comment below. Thanks again for joining me, and I look forward to seeing you next week.